also one of the banks that we're looking at this morning. We got Bank of America's latest quarterly results here in a show of strength. Third quarter profits at Bank of America were up 10% from a year ago. The second largest bank in the U.S. got a boost from higher interest income and strong performance from its Wall Street unit here. Now, revenue rose a little over $25 billion, up 3% from a year ago, and its trading and investment banking revenues also increased, a sign that a slump in deal making is starting to thaw. Now, in the company's latest earnings release, Chief Executive Officer Brian Moynihan said the bank added clients and accounts across all lines of business. Moynihan also said, quotes, the U.S. consumer spending is still ahead of last year, but continuing to slow, and all in goes on to call it a slowing economy. And when you think about these results from Bank of America, and two of the things that jumped out to me most notably as this call is taking place as we speak, it started at 8:30, so we're going to continue to monitor to see what more comes out from it. But particularly here, one of the things that did come in to mind was that net interest income, because this is a company that was looked at as one of the largest beneficiaries, especially considering the rate environment and where it stands right now and the customers that they service. And so all of that considered, that was one of the major areas investors were going to be watching. And then additionally, just in that commentary that I want to come back to real quick and what Brian Moynihan had to say, saying the growth in revenue and earnings allowed them to continue investments in people and technology. But at the same time, they're doing this in a healthy but slowing economy that saw U.S. consumer spending still ahead of last year, but continuing to slow. So that slowing economy kind of mirroring what we were hearing from J.P. Morgan CEO Jamie Dimon, discussing not necessarily kind of in a meteorological type of approach, the economy, but still identifying those areas where it is slowing significantly versus last year. Yeah, there certainly are some reasons to worry just about what the landscape is going to look like here over the coming quarters, given the fact that we are seeing this pressure on the economy, the higher for longer rate environment that Fed officials have been warning about now for several months is starting to take hold, and the effects of that, I should say, starting to take hold. And there were some signs in this report that some customers are starting to run into problems amid this higher rate environment. Net charge-offs, $931 million. That's up 79% from just a year ago. Also, the bank putting aside more money for future loan losses. That also rising here to the upside. So some worrisome signs that investors and analysts are going to be closely watching here. When it comes to some of these results, we know that Bank of America has been underperforming its peers, right? A lot of that is because the concern of its investment portfolio and exactly the exposure that the bank has amid this elevated rate environment, because the move during the pandemic that they made to pile billions of dollars into those longer dated treasuries and mortgage bonds. That's of course weighing on the business right now. And you take a look at the year-to-date performances of Bank of America and compare that to what we've seen from J.P. Morgan, from Citi, from Goldman Sachs. Clearly an underperformer among that group. So lots of questions just about the direction here from Brian Moynihan, what the company is going to do to turn that around, because you can see that year-to-date performance off just over 18% for Bank of America.